Hey guys, it is Making Bank Finance here. Are you ready to learn all about the different asset classes out there? I know I am. Let's start off with the basics. An asset class is a grouping of investment that share similar characteristics and are subject to the same laws and regulations. There are many different asset classes, each with its own sets of risks and returns. One popular asset class is the real estate. You can invest in real estate by buying houses, to rent out, or to flip, or even buy farms like Bill Swagger Gates. While real estate can require a lot of work at times, it also has the potential for high returns. Another option is to invest in REITs, which are the diversified portfolio of houses. Some REITs have significantly outperformed the S&P 500 over the last 20 years or so. This makes the REITs an example of a very profitable asset class other than stocks. Another asset class is called the commodities, such as gold, silver, and oil. These investments are like turtles. They tend to have slow and low returns, but they also tend to have lower risks. This is because the supply of commodities is limited, so the demand and the value will always remain relatively stable. Stocks are another popular asset class. They are usually divided up into different market caps. There are large cap, mid cap, small cap, and micro cap. Large cap stocks are well-established companies that genuinely have lower risks, but also lower returns. Mid-cap stocks offer lower risk compared to small cap stocks, but higher returns compared to the large cap stocks. Small cap stocks are riskier because they're typically not well established, but they also have the potential for higher returns due to their growth potential. And then there are micro cap stocks, which are extremely risky due to their small size, but also have the potential for high returns. Another type of asset class is bonds. Bond is a type of debt security that is issued by the governments and corporations in order to raise capital. When you buy a bond, you are essentially lending your money to the issuer in exchange for periodic interest payments and a return of principal at maturity. The issuer is the borrower, and you are the lender. Government bonds and company bonds are both options. Bonds offer low returns, but they can be a good way to diversify your portfolio and mitigate risks. Now let's move on to a relatively new asset class compared to the rest of these mentioned in the video, and you might have guessed it, is the cryptocurrencies. They come in all sizes, including microcap, small cap, mid cap, and large cap as well. Cryptocurrencies can be risky investments if you don't understand how they work, but they also have the potential for high returns due to their high volatility. There are also some more obscure asset classes out there, such as that banana on the wall, the rare Pokemon cards, or even bird waste. Yes, they can be used as fertilizers. And don't forget about the cash itself, which can be a good asset to hold depending on the market performance. So, which asset class have the best returns? Well, it really depends on the time period you are looking at. In the past 10 years, cryptocurrency had the best returns. But overall, stocks and real estate tend to outperform the rest. It's a good idea to diversify your portfolio by investing in different asset classes at different times depending on their performances. Again, remember to invest in different asset classes that can help you diversify your portfolio and lower your risk while maximizing your returns. And that is why professionals usually invest in a variety of different asset classes. Thank you for joining me on this journey through the world of finance. I hope you now have a better understanding of the different asset classes out there and how they can be used to build a diversified and successful portfolio. Happy investing!